We will record this session, inshallah, and I will put it in the YouTube after that. Type at the beginning. Why this topic? Why? How to invest in the stock market? Many people, they have extra cash and they want to invest it. And if they put it in the bank, especially here in UAE, for example, they are giving very low return, 2%. So many people, they think we need to find another opportunities to invest in it. One of it is to invest in the stock market. But the problem, many people are interested to invest in the stock market, but they don't know how, what is the terminology, how they understand this. So this is, today we will talk about basics of the stock market. Here, you can follow me by scan this code in LinkedIn. I will put on a regular basis some videos and some articles and some tips about finance issues. What is the forms of the business? We have three different types of business organizations: sole proprietorship and partnership and corporations. The small supermarkets, the laundry, all this is sole proprietorship or maybe a partnership. We'll not focus about that. We want to focus about corporations or companies. This will be our target for today, the corporations. Try to think any company. We will give examples based on UAE market. Any companies like Emirates Airlines, like Emaar. What is the goal of any corporation? What do you think? What will be the goal of any firm in the world? Any corporation? Apple, Microsoft, Emaar here. What is the goal? This is different goals that can be the main goal of the company. Maximizing profit, minimizing cost, maximizing the market share, and maximizing the market value of the stock. What do you think? Based on your knowledge, what do you think? What will be the goal of any firm in the world? People who's attending, what do you think?
Maximize profits, profit maximization.
Profit maximization. Right. Anybody else have same vision or different vision? What will be the goal of any firm? Okay. Many people, they think like Murtada that the goal is maximizing the profit. But maximizing the profit have some problems in it. First, it didn't tell us about the risk that are related to that. In finance, it's very important to relate the return to the risk. So if I said profit maximization and I didn't say the risk, for example, if someone buy, you know, in the West, they have something called lottery, which you buy a ticket and you can win $1 million. So here the goal is that you can earn $1 million. But what is the risk? 99.99% you will lose your money. So here, if I didn't tell you the risk that are related to this goal, it's wrong, it's cheating. Another issue, also, when I said profit maximization, we didn't say when the profit will be maximization. Next year, after 10 years, it make a difference. So the goal of any firm in the world is maximizing the current value of the company stock, if it's a public company, and we will talk about that later, or in general, maximizing the stock value of the firm. This is the goal of any firm in the world, whatever, Microsoft or Emaar in UAE or any firm, will be the goal. We want the stock prices to increase. Basic idea, if you invest in any company and you buy a stock at 50, you will be happy if the stock go to 60 because you will make a profit of 10. So if the stock prices is going up, you will be happy about that. That's why the goal of any firm, and this is what the management, they put it in front of their eyes, is maximizing the current value of the company's stock. Here, how to link between the investors and the corporations and the government, which we call it here is in the financial market. Investors, which is people like you, they have extra cash, they want to invest it. So what they will do, they go to the market, they buy some stocks, which is securities, as you can see here in this graph. They will buy securities and they pay cash for it. Who issues these securities? It's a companies, corporations, for example, like Emaar. So Emaar here, they issue stocks and investor that they are interested to invest in it, they pay cash to buy these securities. This is the relation between the investors and the corporations. After that, when the corporations are making a profit, they make cash flow. What happened for the corporation? Part of it, they must pay it as a tax for the government. And here is the relation between corporations and the government. We don't have tax here in UAE, but in most of the countries in the world, corporations are paying part of their profit as a tax. Maybe 20%, 30, 40%. They pay this part as tax. So here, part of the cash that the corporations, they have it, it will go where? To the government because of the tax. Another part, when the company are making a profit, part of this profit, after they pay the tax, they will distribute it to the investors in the format of dividends. So part of the profit, they will go to the investors as profit, as dividends. And there is part, they will keep it inside the company. Why they will keep it inside the company? To reinvest again in the future, to make another project, to expand the business, to open new branches, and so on. So part of it, they will keep it inside and reinvest it in the corporation. This is the cycle between the investors and the corporations and the government. This is a chart for a typical company. In the top, you can see we have the shareholders, which shareholders are the owners of the company. Shareholders are the people who buy the shares of the company. Shareholders, they will elect and select through the voting the board of directors and the chief executive officer, the CEO, chief executive officer, which he will run the business. And under the CEO, we will have, for example, COO, chief operating officer. We can have different vice presidents based on the scale of the company, vice president for marketing, for finance, for manufacturing, and so on. This is just a typical chart for the company. So you can see here that the shareholders, which are the owners, which are the investors, that they invest in the company, they will choose the people who will manage the company. Any company like Emaar here, every year there is a meeting at the end of the year, and the shareholders, they have the right, based on the shares that they own it, to agree about the results of the company, to they don't like the performance, so they can get the management out and hire another management by voting about that. So here's the shareholders, very important. They play very important role in the corporation, which is they are the investors. So if you are invest in a company, you become a shareholder. But what type of securities we have? We have two main groups, public securities and private securities. What is the difference between public securities and the private? Public securities, which is meaning securities that are traded in a public market exchange, like here. There is some companies are traded in the stock markets like Emaar, like Etisalat, but some companies are not traded in the public market. We call it private securities, like for example, Emirates Airlines. Emirates Airlines are not traded in the stock market. So when the company are not traded in the stock market, this is what we call it private security. Some companies, they decided to go from private to become public. If the company want to go from private to become public, this will happen through a process we call it IPO, initial public offering. We'll not go details about it, but just to know, the first time that the current investors, they sell part of their shares to the public, this transaction happen in something called primary market. After that, every transaction that happen on a daily basis, this is what we call secondary market. So first time Emaar go to public, Emaar was owned by Dubai government. First time Dubai government sell part of their shares to the public, to anybody like you. This process, we call it initial public offering, and this is happened through the primary market. After that, every day, any transactions that happen in Emaar, will happen in the secondary market. Now, this is the most important. What we will buy in the stock market is the common shares. So here, some people, they want to ask, what is the common shares? I will go and I invest my money to buy some stocks. What is the common shares? Common shares is a certificate that indicates ownership in a corporation. When you buy a share, you buy a part of the company and attain ownership rights in proportion to your share of the company. For example, if the company have 1,000 shares and you buy one share, you become owner in the company, but your ownership or your proportion in the company is what? 1/1,000. But at the end, you are owner in the company. Someone else buy 100 shares. He had 10% of the company. Both of you, they have the same rights, but not the same power. More and more shares you have, more and more power when we have voting to take the important decisions. So the common shares is here, is certificates that give you what? Something, legal documents that give you indications that you become owner in a corporation. These common shares, this certificate will be traded in the stock market if this company is public company. Private company, as we said, it will not be traded in the financial markets. Common shareholders, the owners of these common stocks, are the true owners of the firm. Investors share in the operating performance of the company. When you become owner in the company, if the company are making good, if the company are making profit, this profit, it belongs to whom? to the owners of the company, which is the shareholders. And also they are participating in any critical decisions for the company through the voting. For example, if we want to choose a new board of directors, if we want to accept acquisition, for example, couple of, I think more than 1 year ago, we saw that Amazon, they bought Souq.com here. So the shareholders of Souq.com, they must accept that. So here, when you become a shareholders, you will take a decision about that. We saw in UAE, there is 2 banks in Dubai. They are merging, and now we have Emirates MBD. Before we have Emirates Bank and MBD Bank. Now they merge and we have Emirates MBD Bank. To have this happen, the shareholders, they must accept that. They will vote about that and they must accept that. So here, the shareholders, they have the right to do that. Ownership. The common stock of the firm can be privately owned, as we said, by private investors, which is a private company, or publicly owned by a public investor if the company is traded in a financial market. What is the characteristics that we will have it about the common stocks? This is different characteristics, different features of the common stocks: claims on income, claims on assets, limited liability, voting, dividends, and the common shares classifications. Let us see here the first one, claim on income. Every year, if the company make a profit, end of the year, before we distribute any profit, first we must pay any interest to the banks. If the company are taking loans from the bank, they are forced to pay interest to the bank before they distribute any profit. If the company, they have something called bonds, which is very similar to the bank loans, will not go details in it, they must pay also the interest for the bond holders before they pay any dividend to the common stocks. Also, there is another format of the ownership, which is the preferred stocks. Will not go details. We don't have preferred stocks in the Middle East, but when the preferred stocks have dividends, the company is obligated to pay dividend for them before to pay to the common stocks. So we can say we have 3 categories here. First, the company must pay any interest to the bank loans and to the bonds. Second category, if there is a preferred stocks, they must pay the dividend for them. Third category, if something remaining after all that, this money will belong to the common stockholders, and it's up to them to distribute it as dividends or to keep it inside the company to reinvest it in the future to expand the business, or sometimes you keep it inside the company to face any bad circumstances that happen, like Corona. During the Corona, for example, I saw that in Dubai, most of the coffee shops, the small coffee shops, they are closed. Small restaurants, they closed. Who survive? The big names like Starbucks, Caribou, and so on. Why? Because these big names, they keep part of the profit inside the company to face any difficult situation like that. If you are a company and you don't keep part like that and you face a big problem like Corona, you will close. So most of the good managers, they keep part of the profit inside the company. Why? To face any circumstances that are not usual. Or, as we said, to make expansions. If the business is doing well, why not for example, for Starbucks, for Caribou as a cafes, we open more and more branches for that, more and more coffee shops. So to expand the business or to operate in another company, for example. So here we need this. So anyway, we understand here what is the meaning of claim on income. You as a common shareholders, you will get the last line, whatever remaining, high or low, it will belong to you after we pay the interest for the banks and the dividend for the shareholders. But when we come to the claims on assets, here we are talking about the situation if the company is facing big problems and it will go to bankruptcy. What will happen? If the company will go to the bankruptcy, which is meaning it will go out of the business, what will happen? Again, we have three lines. The company must pay first all the obligations, which is they pay any tax to the government, pay any loans to the banks, return any bonds. This is the first line. Second line, the company, if they have preferred stocks, they will pay it. After they pay these two lines, we'll come to the last line, which is the common stock holders. Whatever remaining, high or low, after we pay all of that, it will return to the common shareholders. Here we are talking about what? We are talking about if the company will go out of the business. 1 minute, Ahmed. When we are talking about claims on income, we are talking if the company is continue in the business. Claims on assets, if the company will go out of the business, what will be the rights of the shareholders? Why you are making all this introduction? You must know when you are invest in a company, you become a common stockholder. What is your rights? What is the good things and the bad things that you will have it? Yes, Mr. Ahmed, he asked a question. Yes, you can ask, Ahmed.
Yeah, I just want to ask you if you can share with us the agenda of this webinar, so we know like what exactly you're gonna speak about.
Okay. In reality, I make introduction about the meaning of the stocks. After that, we will go and we will have the screen of Dubai financial markets. And in these screens, we will learn all the terminology that we will have it. What is the meaning of bid, ask? What is the meaning of limit order and market order? How it's applied and so on. And what is the meaning of high in 52, low in 52? All the terminologies that you can see it in the screen of the stock market. This is the basics that you will learn through our webinar today. So before we go to this screen, I'm just talking about the characteristics of the common stocks that you're supposed to buy it if you want to buy a stocks in any financial markets. So basics idea about the common stocks, and later we will go to the screen of the financial markets. And there is no difference between the screens of the financial markets. We will take examples about Dubai financial markets. Okay?
So it will be only regarding Dubai financial market? And I mean, you will not trust any other platforms?
Today, we will focus about that because same terminology that you will say it, you can apply it in any other financial market. When we are talking about bid and ask, it's the same. When we are talking about market order, limit order, all these, what is that meaning? How the system is working to make a matching between the bid and the ask. All these, it doesn't matter what is the name of the stock markets. All of them are the same procedure. Okay?
Okay, thank you.
Welcome. We spoke about the claims on income, claims on assets, limited liability, which is very important. What happens if the company will go out of the business? It goes to bankruptcy. In the beginning, we said we have three forms of business. we have sole proprietorship, we have a partnership and the corporation. In the sole proprietorship and partnership, if something happened to the business, they will come and take all your money. They will come and take your personal issues. They will come and take your personal car, your personal house, and so on. In the corporation, no. If you are a shareholder in a company and the company go to the bankruptcy, the maximum that you can lose it is the amount that you invested in the company. Nothing more. That's why we call it limited liability. You can't lose more than the amount that you invested in the corporation. Voting rights, we said, you as a shareholder, you as investor in a company, you have the right to elect and select the board of directors, which they will manage or the corporation. Also, you have the right to approve any changes that happen to the corporate charter. For example, any acquisitions by another companies, merge with another company, you must vote about that. Only the common stockholders, they have the right to do that. Dividends. Dividend is the distribution. As we said before, if the company make a profit, after they pay any interest to the banks, if they're having loans, any dividends for the preferred stocks, the remaining, we have two ways. One way that they distribute all of these profits or part of it to the shareholders. This distribution, we call it dividends. This distribution that the company distributed to the owners, which is the shareholders, this distribution, we call it dividends. And we said there is another part, they keep it inside the company. Here, just need to know that part of the return that you get it when you are investing in a company is dividends, that you receive part of the profit on a regular basis when the company are making a profit, and this part we call it dividends. We have two types of dividends. Cash dividends, which is the company will distribute for you cash when they make a profit. Sometimes the company have profit, but they don't have sufficient cash, so they will distribute for you a dividend, but in the format of something called a stock dividend. For example, if you have 1,000 shares, they will say, we will give you 10% as a bonus shares or stock dividends. So if you have 1,000 shares, we will give you 10%, which is 100 shares. Now your number of shares is increasing. So again, the dividends have two formats. One of them is cash dividends, which give you a cash. The second format, if the company doesn't have sufficient cash, but they have profits, they can give you something called stock dividends, which is percentage of the dividends that you have. They can say, I will distribute 10%, 5%. So every shareholders, he will take this percentage. Again, if you have 100 shares, for example, and they give you 5%, you will have extra 5 shares. So instead that you have 100, you will have now 105. This is the two main formats of dividend: cash dividend and stock dividends. What is the type of the shares that the companies have it? The companies have three categories: authorized shares, issued shares, and outstanding. What is the meaning? Authorized shares, the company take the approval from the authority about a specific number of shares. Like in our example here, the company, they take approval about 245 million shares. But it doesn't mean they must issue all these shares. No, it's up to them. Here in our situation, the company only issues this number, 114,988,369. Now, what about the remaining between this number and that number? In the future, they can issue more shares without needing any more approval from the ministry, from the authorized entity. No need for any other approval till they reach the 245 million. If they reach this number and they need to issue more and more, they need to take another approval. But till to reach this number, no need to take any other approval. In our situation, the company issue 114 million, but the outstanding, which is the real number that we can see it now in the stock market, is only 85. There is a difference between 114 and the 85, which is 29 millions. What is these shares? What is the difference? Sometimes the company decided to buy back their own shares. We call it treasury stocks. The company, they buy back their own shares. Sometimes to support the price, especially if there is a crisis like the corona. Sometimes they distribute these shares for the top management, something called stock option. For many reasons, they can buy that type. When they buy their own shares, which is in our situation here, this number, the 29 million, in most of the countries, they have 1 year to sell it back, or they must decrease the number of issued shares to the real number of outstanding. So this is the 3 categories of the shares. Authorized, which is the number that they take approval from the ministry, from the authority entity. The second one is the issued, which is the real number that the company issues in the stock market. The third one is the outstanding. Most of the time, the outstanding is equal to the issued stocks. The only difference, if the company, for some reason, they buy part as treasury stocks, and as we said, they can keep it for 1 year, and after that, they need to sell it, or they need to decrease the issued stocks to become the outstanding. Exchanges, which is the stock markets, provides the places where trades can meet to arrange their trades, where traders or brokers, they will meet. Here in Dubai, we have Dubai Financial Market. You can see it in Sheikh Zayed Road. We have also Abu Dhabi Stock Exchange, which is a place that brokers or traders, they go there and they trade the stocks there. We will see now how they will trade. But exchange, this is the place. Exchange arrange the trades for the traders based on the orders that the brokers, we will see that in details. Just you need to know, the exchange is the place that you can, brokers or the investors, they can ask the brokers to buy and sell their shares. But we'll not go more about exchange more than that. We have New York Stock Exchange, which is the biggest stock exchange in the world. We have Tokyo Stock Exchange, and here we have, for example, Dubai Financial Market DFM, which we will take example based on it. Brokers, in most of the countries, you can't buy or sell stocks by yourself. You must have someone in between you, between the buyer and sellers. So here, if you want to buy, you go to the broker, and the broker will execute this order to buy. If you want to sell, you go also to a broker. Brokers are met through the exchange. Now it becomes electronic, and the transaction will happen, as we will see after a couple of minutes. And these brokers, why they will do that? Because they are taking commissions. And these brokers must be licensed by the exchange. Not anybody can go and say, I want to be a broker. You must take a license to be a broker. And it's a corporation, and it needs, most of the time, huge amount of capital. Before we go to the screen to see how the trades are going on and to understand the terminology. Any questions before we go to the screen of Dubai Financial Market?
No.
No comments? Please, can you open, I put here this link, please. Can you open it, please? This is for, you can go to Google even and write DFM Market Watch, and you will go to the website. Here is the website that we are talking about it. When you open the page for Dubai Financial Market, you will see that. In most of the exchange is similar terminology, similar screen. So we just take an example to understand what is that meaning when you see this terminology, what is that meaning? So it can help you to, when you decided to buy shares, what is that? Everybody open this screen. Here in the left, you can see the names of the company. This is the companies that are listed in this stock market. Not all the companies in Dubai. No, this is the only public company which is their shares are traded in Dubai Financial Market. If you go down, we'll choose one of the most famous companies here, which is Emaar. Everybody sees that? Emaar. Emaar Properties. Here, first column, you can see the title is previous closing. What is the meaning of previous closing? The market is working 5 days per week. They are taking 2 days off here in Dubai, Friday and Saturday. Every day are working from 10 a.m. till 2 p.m. When he said previous closing, we are talking about the previous day, previous working day. Yani, for example, today we are Saturdays, there is no market. When I read previous closing, we are talking about Saturday, which is 15th of July. This is the meaning of previous closing. We can see here for Emaar, for example, 3.99. There is many methods about how to calculate the previous closing. Usually it's average of the last 30 minutes or something like that. Average of the trades, it gave me 3.99. This is the closing of last working days. Open, the market is open at this price, 3.99. High price, what is the meaning of high price? During the 4 hours of trading, we said in Dubai here, the market is open from 10 a.m. till 2 p.m., 4 hours. Every second, there is trades happening. Someone is buying, and in the same time, someone is selling. When there is a matching between buying and selling, this will be a transaction. These transactions happening at different prices. Here, when he said high price, during the day, which is Thursday, the highest price that happened for Emaar is 4. The highest price, the highest transaction that happened for Emaar is 4.0. The next column is low price. During the day, the lowest transaction that happened for Emaar is 3.94. So you can see the maximum that happen, which is the high price, is 4.0 and the lowest price is 3.94. This is the range. Between this range, there is some transaction happen at 3.95, 3.97, 99, whatever, but there is no transaction happen above 4 and there is no transaction happen below 3.94. This is help you to know what is the range of the transactions that happen during the day for Emaar, which is one of the biggest companies in Dubai financial market. After that, we can see here something called bid volume. We have bid and ask. Bid, it's meaning the demand. Ask, it's meaning the supply. Demand, it's meaning people that they are interested to buy this stock. Supply, which is the ask, people that they are interested to sell this stock. If we come here to Emaar and I right click on it, you will see this small window. Here you see something called show as pop-up. If I double click in it, I will see this screen, which is very important. I will see that. What is this screen? Tell me. I have here, this is for Emaar. I have in the left market by price. They ordered, they arrange the orders that people they want to buy and to sell based on the price, based on the price. I will make it big so everybody can see it here. As you can see, there is buy and sell. I'm talking under the market by price. There is something called market by order. Leave it now. I'm talking about market by price. I have buy and sell. Buy, this is the orders of the people that they want to buy Emaar. What you can see in the screen, first one, volume 46,250 and the price is 3.94. What is that meaning? There is some people, they want to buy Emaar at 3.94. How much is the quantity that they want to buy it? 46,250. Next one, at 3.93, we have 757,283. So at 3.93, there is people, they want to buy Emaar. How much is the quantity? Is 757,283. You can see the buy, we order it from the highest to the lowest. Someone can ask me why we order the demand from the highest to the lowest. Basic idea. If someone wants to sell the stock, he will sell it to the demand or to the supply. What do you think? People that they are attending. If you have some stocks that you want to sell it, you will be caring about the sell or about the buy.
The buy.
The buy, yes,
Yeah.
exactly. The buy, it's meaning some people they want to buy and you want to sell. Here is the matching happening between the sell and the buy. So if you want to sell, what happened? You will be caring about the buy. People, they love money. So if I want to sell, I want to sell to the highest price or to the lowest price?
To the highest.
To the highest. That's why when they put the orders of buy, they rank it from the highest to the lowest, because you are interested about the highest price. You are interested about the highest price because you are selling. Because you are selling. The opposite. If someone want to buy, he will buy from whom? From the supply, not from the demand. So when he go to buy, put yourself in the same situation. You want to buy at lower price or higher price?
Lower, of course.
Yes, I want to buy at a lower price. So in the sell, we rank the sell from what? From the lowest to the highest, because people are caring about the lower price, because they want to buy at lower price. So you can see the sell. In the sell, which is in the orange, you can see at 3.97, there is 44,645. So at this price, there is some people, they want to sell 44,645. After that, 3.99, 26,640. At this price, people, they want to sell this quantity, and so on, at 4.01, and so on. So this is the way in every market. We put the bid from the highest to the lowest, and the ask, which is the sell, from the lowest to the highest. Because people, if they want to sell, they want to sell to the highest price. And if they want to buy, they will buy from the lowest price. Clear why we order it by this way?
Yes.
You will see the same in every market. Yani we take Dubai as an example, but you can see the same in New York, in Tokyo, in every place is the same. Down under the buy, you can see what? The total quantity that the people, they want to buy it at different prices is 4,120,000. But this is at different prices, And how many they want, they sell, you can see in the orange, there is 10 million stocks. People, they want to sell it at different prices. So this screen, it shows me in details. If I am interested about Emaar, whatever I want to buy or I want to sell, I can see here the details about the buy, which is the bid, and the sell, which is the ask. Any questions here?
No.
It's clear what I am saying?
Yes, yes.
Fine. Let us return to the main screen here. After next column, bid volume. When he said bid volume, he's not talking about the total bid, which we say it's here, the 4 million. No. You can see with Emaar, he put what? 46,000. What is the 46,000? This is the quantity that the people, they want to buy it at the highest price, which is 3.94. You can see the next column, something called bid. And you can see 3.94. So 3.94, this is the highest price at that minute people, they want to buy. And how much is the quantity they want to buy it at this price is 46,250. This is important for you For example, if I want to sell 20,000, I will sell it to this price. We'll come to the orders now, but just to understand, when they put the bid volume and bid, this is not the total bid. No, this is the quantity at the highest price, which we say it here in this small window. The first line 3.94, this is the bid, and 46 is the quantity at this price. We take this line and we put it in the main page. And also for the sell, I have 3.97. This is the first line, and the quantity is 44. Go to the main page. You can see that here. Next column is the offer. In the offer, you can see 3.97, and the quantity is 44. So in the main page, when they show you the bid and the offer, which is the ask, we are talking about the first line, not the total amount. No. Only the first line. What will be the best price to buy? What is the best price to sell? And what is the quantity at these prices? Clear what I am saying? Clear
Yes.
for everyone? No questions? After that, the next column, something called current price. The last transaction that happened in Emaar at that minute is 3.94. We said the market is open for 4 hours. Let us say now the timing is at 12, and what happening? We want to know what will happen. So during the session, for example, at 2, I want to know what is the last transaction happened in Emaar. So I can see here that the current price is 3.94, which is the last transaction that happened in Emaar. The price is 3.94. Next column, price change. What is the price change? It shows here in the red, which is meaning it's decrease. When it's red, it's decreasing. When it's green, it's increasing. It showed me 0.05. This is come from where? You can see here in the whiteboard. You can see the whiteboard? Yes or no?
Yes, I can see the board.
Okay. You can see here, if I want to know the change, what will be the change? I will take the previous closing. You can see here, the previous closing is 3.99. And the last transaction is what? 3.94. So this is the current. And 3.99 is the previous closing. You can see the difference. The price goes down by how much? 0.05. So when he mentioned to me here that it goes down, he takes the difference between the previous closing, which is previous day, and the last transaction happened. So we can see here, yesterday it was 3.99. Last transactions that happened, it was 3.94. It showed me the absolute change that the price goes down by 0.05. And because it goes down, we put it in red. The next column, the price change as a percentage, Same data here. We said the price goes down by 0.05. If I take this change and I divide it by the previous, which is 3.99, it gives me the percentage of change, and it shows me here the percentage of Emaar change, 1.25%. So when I read in this table that the price change by 1.25, first it's a percentage, and it goes down because the price go from 3.99 to 3.94. And I show you how to calculate the absolute change, which is the first column in the price change, and the following column, which is the price change as a percentage. So Emaar goes down by 5 fils, but in the same time, it goes down by 1.25%. Clear? Any comments till now? After that, you can see daily volume. What is the daily volume? How many stocks in Emaar was traded? 27,444,224. This is the number of shares, the quantity of shares of Emaar that was traded on the day. Only on that day. These 27 million, how much money people they pay for it? This is the next column. Daily value. People they pay to buy this 27 million, they pay for it how much? 108 million. We understand what is the meaning of the 27 million and what is the 108 million?
Yes, clear.
Okay, so we understand what is the meaning of daily value, what is the meaning of daily value. The next one is the number of transactions. For Emaar, how many transactions that happen? People, yes, they buy 27 million, but this quantity, it happened in one transaction or 1,000 transactions? We need to know. So the next column, it tell me there is 381 transactions that happen. Some of them, it could be one stock. Some of them, it could be 1 million stock. The total quantity that was traded is 27 million, divided through 381 transactions. We don't know every transaction, how much is the quantity. But we know during the day, there is 381 transactions happen. People, they buy 27 million. When I said buy, it means there is another side, which is sell. To have a transaction, you must have what? Buy and sell. And they match it together. When the buy and sell match it together, we have what? We have the transaction. So when they say transaction, there is meaning there is buy and sell matching together, and it becomes a transaction. The next column, you can see 52 high. 52 is the number of weeks in the year. So during the last year, the highest price ever Emaar reached is 4.29. This is the highest price during the last year that Emaar reached, 4.29. The next one is 52 low. During the last year, what is the lowest price that Emaar reached is 2.54. We understand these some basics that you can see it when you open the screen for any stock market, you will see same terminology. So at least you can understand it when you are talking with your broker to buy or sell. You need to know the basics. By this way, no cheating will happen. And also, if you are a small investor, most of the time you will buy and sell online. Buy or sell online, you will find these screens. So we need to know how to buy and how to sell based on this terminology. I hope this terminology is clear. Clear for everyone?
Yes, it's
Yes,
clear.
it's clear.
Let us see something here. We have two types of orders. If you decide to buy or you decide to sell, we have something called market order and limit order. What is the difference between market order and limit order? In the market order, you will call the broker and tell him buy or sell immediately. Whatever you see in the screen in front of you, do it. Let us take example about that. We go here to the small screen. We said here is the buy and here is the sell. Let us say someone want to buy 10,000 shares and it's a market order. Market, it's mean you must execute it immediately. You will not wait. You must do it now. Right. If I want to buy, I will see which section, the buy or the sell?
The sell.
The sell, because the matching happen between the buy and sell. So if you want to buy, the other side will be the sell. If I want to buy 10,000, what happened? I go and I check the lowest price available is what? 3.97.
97.
Immediately, the broker, he will take 10,000 from the 44,000 that you can see it in the screen at 3.97. So when I said buy 10,000 market order, it will be executed at what? At 3.97 dirham per stock. We understand it? Yes?
Yes. Yes.
Yes.
What about if someone want to buy bigger amount? For example, he want to buy 50,000. What will happen? And he gave an order, market order. Take care about the name of the order. Market order. What happened? The broker opened the screen. He found the lowest price is 3.97, but the quantity is 44,645. He will take this quantity at 3.97. But the order is bigger than this. Yes or no?
Yes.
We
Yes.
want to buy 50,000, but there is only 44 at 3.97. I will take the 44 at 3.97, and the remaining quantity, which is 5,300 something, I will buy it at the next price, which is 3.99. We understand? This is the meaning of what? Market order. Whatever available in the market, I will execute. At that minute, maybe after 5 minutes, different prices, lower or higher. But at this minute, this is the available prices that are there. Clear? The opposite. If someone wants to sell 10,000 shares, what will happen? I will go and see the bid. I will go and see what the bid. Because I am the seller. The other party will be what? The buyer, to make a matching. So if I want to sell 10,000, I go and I check the highest bid. The highest bid. The highest bid is what? 3.94. There is enough quantity? Yes. There is 46,000. So I will do what? I will sell the 10,000 at 3.94. Clear?
Yes.
What about if someone wants to sell big quantity, 50,000, for example? Someone wants to sell 50,000. What will happen? He will go to the first bid, 3.94. He will sell 40,250 at that price. But this is not sufficient. There is remaining 3,750. He will go to the second one, which is 3.93, and he will sell it. So here we divide the order to two parts. First part, 46,250 will be sold at 3.94. The remaining quantity, which is 3,750, will be sold at 3.93. If it's a market order, it's meaning you will execute it immediately. Whatever, if you give the order to the broker or online you do it by yourself. But there is another type of orders. We call it limit orders. The problem, we have advantage and disadvantage for the market order. Advantage, you will execute it immediately. So whatever you want to buy or sell, it will happen. And you are receiving the best price at that minute. But what is the disadvantage? The disadvantage, it could be the price that the transaction happened at it or executed, very high or very low, whatever you are buying or selling. Some investors, they don't want this risk. So they put limit order. They put a specific price. For example, here, someone want to buy 50,000 and he put 3.95. Very clear that the ask, people that they want to sell at what? 3.97. Fine. But my investor, he doesn't like this price, 3.97. He wants to buy at 3.95. Fine. He gives the order to the broker, or through online, he can put it at that price. When he put that he will buy 50,000 at 3.95, by the end of the day, maybe he buy, maybe not. But at least he knows the price. So no surprises will happen. So with the limit order, the investor, the client, he put a specific price, but he doesn't know that the market will execute at this price, or maybe end of the day, he will not buy or he will not sell. We understand what is the difference between market order and the limit order. It's up to you as investor to decide to put market order or to put a limit order, and the broker must follow your instructions. And now, through the online, the instruction, you put it in the system of the computer to buy or sell. Clear? Any comments till now?
No.
No.
1 minute. Very important questions that happen how can I know this stock is good to buy it or no? طبعا this is very detailed, and here we just talk about the basics, but I will give you a basic idea for any investment, not only stocks, whatever real estate, cars, anything. Let us give a small example. Someone want to buy a car. Let us say I want to buy the car. I want to buy Mercedes. It's not a new car. I want to buy 2019, and I am not expert in cars. So I bring someone is expert. For example, our colleague here, Mr. Bikash, is expert in cars. So I will bring him with me. We go to the place to buy the car. So I ask him, what is the estimated price for Mercedes 200cc 2019, all these characteristics. He told me the good price is 80,000. Fine. I take his word, he's expert in cars. We went to the market. We found the price is 90,000. What do you think? What will be the recommendation? Buy or not to buy?
Not to buy.
Not buy. Don't buy.
Again, the expert, Mr. Bikashi, said 90,000. But I found the price in the market is 100. By very nice word, we call it expensive. The car is what? Expensive. Why I buy something expensive? I will not buy it. In this situation, we call the car is overvalued, overpriced, overvalued. So very clear, if the market price is greater than the estimated value, my recommendation is what? Is not to buy. My recommendation is not to buy. Why? Because the car or the asset is overvalued. Overvalued. What about if we go to the market and we found a car with 80,000? What will be the recommendation? Our expert said the car supposed to be 90,000. Now we found it 80,000 in the market.
We will buy.
Yeah.
We
Buy,
will
yes.
buy it. We will buy it.
Buy.
So it's undervalued.
Because it's undervalued. Same concept that we use it here. These rules that you can see it in the screen. I compare the market price to the estimated value. Estimated value in the cars and these issues is easy to bring someone expert. But in the stocks and in the real estate is not easy. There is many ways about how to estimate the value for stocks. This is beyond our lecture today. But this is the rule. All the time, put it in front of your eyes. To buy anything, whatever apartment, whatever stocks, whatever cars, I compare what? Market price to the estimated value. If the market price is lower, this is a good investment. Why? It's undervalued, so the recommendation would be what? Buy. The opposite, if the market price is greater than the estimated value, this will be overvalued, overpriced, and my recommendation will be not to buy. My recommendation is not to buy.
To buy.
Now, if you buy a stock, anybody buy a stock, he want to get a return from this stock. A benefit, he must get it from buying the stocks. What is the components of the return that I get it from the stock? There is two main components: dividends income and the capital gain income. we call it dividend yield and the capital gain yield. And when I add both of them together, it gave me the total return, the total yield that I get it from investing. When you invest in anything, in stocks, in real estate, in bonds, in anything, you must get a return. And if there is no sufficient return, why you do that? So here, we divide the return to two components, dividend yield and capital gain yield. What is the dividend yield? Dividend yield, if I divide the dividends that the company distributed over the price that I paid to acquire the stock, this percentage we call it dividend yield. So what is the formula for dividend yield? Is the dividends that I received from the company divided by the original price that I paid. The second component, which is the capital gain yield. What is the capital gain yield? Most of you, they know it as a general knowledge. If I buy land with 50,000, I put it here in the whiteboard. If I buy a land at 50,000 and I sell it, so 50,000 buy, and after 1 year I sell it at 60,000. What is my profit? What is my gain?
10,000.
Yes, which is 60,000
10,000.
minus 50,000. It gave me 10,000. My gain here, this is absolute amount. 10,000 dirham, I get it as a gain. But what is my percentage as a gain? My capital gain yield, which is a percentage, I will get this 10,000 and I divide it based on the amount that I paid, which is 50,000. 10,000 over 50,000, it gave me 20%. So when the price goes up here from 50 to 60, I make a return, a percentage on my investment is 20%. I make 20% as a return. This return, we call it capital gain yield. Capital gain yield. You as an investor, you will get two returns, dividend and capital gain. In any other assets, in any other investment, you will get the same. For example, if you have a building, you buy a building, the rent that you get it from the building, because you are renting apartment, this rent that you get it every year is similar to the dividend yield, but we call it rent yield. And when you sell it later, whatever you make a gain or loss, this will be your capital gain yield. When I add both of them together, the dividend yield plus the capital gain, it gives me my total return. Let us take an example about that to calculate this. Let us say you purchase 100 shares of Emaar stock at 5 dirham. Today, Emaar paid a dividend 0.5 dirham as a dividend. And you decided to sell it. When you go to the market, you found that you can sell it at 6 dirham. If this is the situation, and I want to know what is my return, we will do the same. We will divide the return to two components, the dividend yield and the capital gain yield. Let us do it together in the whiteboard here. many stocks I have? I have
100 shares.
and I pay 5 per share. So my total investment is
500.
this is what I pay to
500.
acquire the stocks. How much dividends I get?
0.5.
0.5 per share. If I multiply by the number of shares, 100, it gave me 50.
50.
From here, I can get dividend yield. I divide the 50 dirham that I receive it over my investment, which is 500.
500.
So I make a return from the dividend. Dividend yield is 10%. 10%. What about my profit when I sell the stock? My capital gain is 6 minus 5. 6 is the selling price, minus 5 is the buying, times the 100 shares. It gave me, I make
100.
how much? 100 as a gain.
Yes.
Yes? Next step, I want to calculate my capital gain percentage, which is yield. I will divide this 100 over my investment, which is
500.
500.
so I
20%.
get a yield of 20%. Now, last step, my total return. What is my total return? I will get 10%
30%.
from the dividends plus the 20% from the capital gain. I make a total of 30%. So you as an investor, when you invest in Emaar and you keep it for 1 year and you sell it later, you make a total of 30% return on your investment. Any comments here?
No.
No.
Clear for everyone?
Yes, sir.
Yes.
We finished these basics. If anyone have any comments or any questions, with my pleasure to reply. And you can see here, you can take a photo for that. If you want to follow me in LinkedIn, I will put on a regular basis, on a weekly basis, some hints, some comments in finance, some explanation to some terminologies, and later I make on a regular basis also some lectures about some concepts in investment and in finance. At the end, it's open discussion, whatever you want to ask, with my pleasure. MashaAllah, no comments, no questions.
Everything is clear, Doctor.
Bad signal, yeah. Anyway, thank you so much for the people that they attend and they take from their time to come here and to listen to that. I know it's very basics, but for anyone is interesting to invest in the stock market, he must know these basics. Other than this, he will not know how to invest. But stock market is a huge sector, a lot of issues, you need to learn it. Today is just an introduction about what is the stock markets, what is the stocks, what is the return, what is dividend, and so on, basic terminology that you can say it. No comments?
No.
Thank you so much.
Thank you,
And I hope to see you in the future in other lectures, inshallah.
Thank you,
Yes,
Doctor.
thank you. Thank you so
Thank
much.
Thank you, sir. Thank you.
Thanks. Bye.
Bye.
Bye, sir.